How's everyone doing? Welcome back to another episode of The Banker Next Door. I am your host, Dr. Joe Berquist. So today's episode, we're going to be talking about, as it turns out, the purchase by credit unions of community banks can, in fact, harm the communities in which they serve. So we actually have a really good analysis from ICBA through a recent article that they just put out, which I will bring up here. Now, this article is entitled "New Analysis Shows Credit Union Acquisitions of Community Banks Harm the Communities That Can Least Afford It." And what we'll see in a minute here is what this study focused on is the net effect of SBA lending and primarily residential mortgage lending. There's a little bit of info on small business lending, but primarily what they found was that after a credit union buys that local community bank that was serving, X community, once that transpires, you start to see a decline in SBA lending and residential mortgage lending and perhaps even small business lending. So this was the net analysis, but I also wanted to read something to everybody here before. So because there's been some other news that has come out. So there's basically this growing media scrutiny around the acquisition of credit unions buying other community banks. So in recent op-eds and I'm going to butcher this name, Natchitoches Parish Journal and the Shreveport Bossier Journal, ICBA leadership community banker Ken Hale details the negative impact that credit union acquisitions of community banks has on local communities. Recent op-eds in American Banker and Real Clear Markets target the credit union tax exemption following ongoing ICBA advocacy. And a previous article in The Banker, an imprint of the Financial Times, says some credit unions may be abandoning their mission with Wall Street style behavior and no longer serving their core members. In the CU Daily, retired credit union CEO Ed Speed cites the loosening of field of membership rules, regulatory maneuvering that exploits tax advantages, and expansion-focused growth strategies. And a recent American Banker article says credit unions are indeed announcing more and more bank acquisitions, sometimes thousands of miles away. So you're beginning to see this kind of snowball of articles and things that are out there on this particular topic. Now, let's run through this article here for a second. So this basically says, and I'm gonna blow this up a little bit here, so hopefully everyone can see this a little bit better. So ICBA and community bankers have long warned about the dangers of tax-exempt credit unions acquiring tax-paying community banks, a concerning trend that peaked last year and has continued into 2025. Now, the results of an exhaustive ICBA data analysis of publicly available data validate what we have long warned. This recent explosion of taxpayer-subsidized acquisitions is harming small businesses and local communities while community banks outperform credit unions in high-poverty areas. And now they have some interesting charts here. So accelerating problem fueled by credit union behemoths. So after tax-exempt credit unions acquired tax-paying banks, SBA lending fell 80% of the time in that affected area. So very interesting. Given how strenuously ICBA and community bankers have been raising the flag on this trend, its scope should come as no surprise. Since 2010, credit unions have acquired 77 community bank charters with less than $50 billion in assets, with more than 60% of these charter acquisitions, 49, occurring in the past 5 years, according to FDIC and Federal Financial Institution FinCEN data. Even more revealing, our data show these deals involve the largest credit unions, which often cross state lines to acquire community banks well outside their field of membership. Since 2010, more than 80% of charter acquisitions involved a credit union with more than $1 billion in assets, while more than 40% involved a credit union headquartered in a different state than the acquired bank. And counter to credit union industry claims, credit union acquirers aren't saving struggling community banks. Nearly 2/3 of acquired banks saw an increase in net operating income in the 5 years leading up to their acquisition, while more than 3 in 4 grew their total assets in that 5-year period. The data is clear. These tax-subsidized entities are using their members' shares to purchase well-performing institutions and eliminating local tax-paying community banks in the process. Harmful impact on local small business lending. So SBA lending in the highest poverty U.S. counties since 2010. So you can see here, community banks, 23.5 billion, whereas credit unions are just a small, meager 561 million. So again, by the decrease in SBA lending, you're seeing this effect on small business customers. Now, the scope of these acquisitions won't come as a surprise to community bankers, but Small Business Administration data on how these acquisitions are harming access to credit in local communities, particularly underserved areas, should give pause to anyone interested in preserving locally based economic growth. Going back to 2010, nearly half of credit union acquisitions of community banks occurred in service areas in which either the acquired bank or the acquiring credit union participated in an SBA program, with community banks in these areas providing an average of $500,000 more in SBA loans to small businesses than credit unions. In areas where community banks participated in SBA programs, SBA lending fell after the acquisition nearly 80% of the time. This concerning development is particularly acute in lower income areas. Community banks have provided roughly 69.3% of SBA loans provided by banks and credit unions since 2010, compared to 2.8% from credit unions. In the highest poverty counties, community banks accounted for 76.5% of SBA lending, compared with just 1.8% from credit unions, showing community banks dramatically and disproportionately outperform credit unions in meeting commercial lending needs in high poverty areas. So not only are community banks stronger small business lenders than the credit unions using taxpayer funds to reduce the number of community banks, but community banks are also doing a better job of meeting the needs of underserved communities and credit unions. So let's say that again. Community banks are outperforming credit unions in the lower income communities that credit unions receive a federal tax exemption to serve. Now let's take a look at residential mortgage lending. So mortgage lending takes a hit. So after tax-exempt credit unions acquire tax-paying banks, mortgage denial rates increased in 61% of affected areas. So if credit union acquisitions appear to be wreaking havoc on small business lending in local communities, mortgage lending isn't faring much better in these communities either. According to our analysis of available Home Mortgage Disclosure Act lending data, total mortgage applications decreased in 57% of affected service areas following an acquisition. The amount loaned per approved mortgage application decreased in 61% of acquisitions, while the median mortgage loan amount across all areas decreased $20,000 per loan. Further, mortgage denial rates increased in 61% of acquisitions, with a median increase of 2.1 percentage points. In areas where denial rates rose, the median increase was nearly 10 percentage points. This relatively high share of areas with increased denial rates and lower application volumes suggests that credit unions are not replicating the mortgage lending practices or community relationships of the banks they acquire, despite the taxpayer subsidized industry's claim. And then we have one more chart here, damaging economic impact in local communities. So jobs supported by SBA loans, and this goes from 2010 to 2024. So community banks, 6 million, whereas credit unions only had 295,000 jobs that they supported. So despite the decline in small business and mortgage lending shown in our analysis has real economic consequences on local communities affected by credit union acquisitions of community banks, particularly in lower income areas. Since 2010, community banks made $23.5 billion in SBA loans in the top 25% highest poverty U.S. counties, compared to only $561 million by credit unions. This community bank lending translated to supporting 433,227 jobs in these high poverty areas, compared to just 16,415 jobs supported by credit unions. Overall, community banks issued a total of $305 billion in SBA 7A and 504 loans, nearly 25 times more than credit unions. Community bank SBA loans supported nearly 6 million jobs between 2010 and 2024, while SBA loans issued by credit unions supported 295,000. A few more illuminating data points. Community banks accounted for nearly 2/3 of SBA loan dollars issued, 64%, compared to just 3% for credit unions. Community banks issued larger loans on average, with the median SBA loan amount of $289,500, significantly exceeding the $150,000 tally for credit unions. And in rural regions, particularly in the Great Plains, the South, the Appalachian, community banks were often the only SBA lenders present. So the upshot here, community banks, small business lending in low-income areas is in a league of its own, and credit union acquisitions pose a significant threat to the communities that depend on this economic lifeline. Now, they conclude this article here by basically saying the road ahead. So with community banks making 60% of the nation's small business loans and 80% of the banking industry's agricultural loans, the surge in credit union acquisitions of community banks has very real consequences. The damage to communities highlights the inequities and perverse incentives built into federal policies that prop up this taxpayer-subsidized industry. Lawmakers granted credit unions a full federal tax exemption on the condition that they serve defined fields of membership, but years of relaxed policies and mission creep have created conditions that are at odds with the public's best interest. ICBA will continue to share this data as we press lawmakers to re-examine credit union policies and end the federal tax exemption for credit unions with $1 billion or more in assets. And we encourage the nation's community bankers to spread the word as well with their members of Congress. As our data clearly shows, the economic outlook for our nation's local communities depends on a much-needed change to federal credit union policy. So, and this article was written by Rebecca Romero Rainey, who is the Independent Community Bankers of America president and CEO. So again, I think this is a very interesting analysis of what goes on here. Now, again, to kind of wrap this up, I will say that, to be fair to credit unions, credit unions are capped. Like they can only make so many business loans. I think they cannot lend more than 15% of their loan portfolio can go toward basically commercial lending or business-related lending, small business lending, as it were. But this shows a much deeper harm, not only with SBA lending, but also with residential mortgage lending. It appears that the amount of declines in low-income areas increases after credit unions purchase, the local community bank that was serving that particular area. So again, a little bit of disturbing trends here, but again, this issue is not going to go away. And I thought this was a great article showing some very interesting information that people would really find interesting. And this issue is only going to become more and more intense as credit unions continue to grow and expand and continue to look to buy community banks. Again, this issue is just going to become a bigger and bigger because again, you have a billion-dollar community bank that's paying a lot of taxes, and all of a sudden that goes away because they get bought by a community bank or by a credit union. Again, that in and of itself is going to have an impact on a local community. So to be continued. So definitely more to come on this topic for sure. So with that, I will wrap up by saying if you like this episode, please make sure to like, share, and subscribe. That always helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below, as I love getting back to everybody. And as always, make sure to check out some of the other content on the channel. I thank you for listening. Have a great day out there, and I will see you again real soon.